Hey guys, Corey here. Today, I want to talk about the issues going on with Israel and Iran and how it could impact the stock market coming up over the next several months or even years. So what's really going on? What could be the potential downsides on the U.S. stock market or the world economy for that matter? The Iranians and Israelis don't like each other. The two countries have been fighting for a very long time, but it's been more of a proxy war. Iran will hit Israeli locations in foreign countries, and then Israel will do the same thing to Iran. Recently, the Damascus situation where Israel had bombed a building next to the embassy and killed the alleged generals for Iran, or a couple of generals that were in that building, has spiked a lot of tensions between Israel and Iran. And Iran retaliated by launching a bunch of drones and missiles at Israel. Most of them, almost all of them, were destroyed before they could make landfall. However, a few of them did hit an airbase or the edge of an airbase in Israel. So there's not really a lot of damage done by that. Now, Iran did make a statement to Israel that if they retaliated to this retaliation, that it would be met with even greater force. There's a lot of tension in the Middle East. Now, I want to quote something that I'm looking at on my screen right now verbatim. And it says that the crude oils are now back to levels that they were before April 11th. The attack on the Iranian consulate suggesting that the latest bout of risk for premium from the heightened Israel-Iran tensions has eroded. Investors are discounting the chance that a regional war would take place, and crude oil prices have returned to pre-April 1st. Basically, investors are discounting the possibility that Israel will attack or retaliate against Iran. Now, the United States government is supporting Israel, and they do kind of have influence on what Israel can do or say to a degree. They're not really controlling them. They do have some form of influence. They have said that they will allow Israel to respond. However, it's unlikely that Israel's going to respond in a way that would spark a regional war. Crude oil prices spiked from $81 all the way up to $87 in fear that a regional war or something even worse could break out in the Middle East. And what investors were really afraid of is that Iran is the third largest supplier, producer of petroleum in the world. And they do a lot of exports throughout Asia, the Middle East, and their oil pretty much ends up everywhere. In fact, the United States, Canada, a lot of different countries are buying this oil. The exact amounts I'm unaware of, but they're buying the oil, and they are the third largest supplier. The whole Middle East supplies a lot of oil. So if there's tensions in the Middle East, the crude oil is going to go up. And if crude oil goes up, that means the CPI index goes up, inflation goes up, and the feds in the United States are already looking for every excuse to not cut interest rates, and they definitely wouldn't turn a blind eye to increasing the interest rates. And that's the entire problem here. If Israel retaliates against Iran on their own soil, even in a proxy fashion, Iran's going to respond, and they're going to keep responding back and forth, and eventually it's going to escalate quicker rather than later into a regional war. The United States is not interested in getting involved in a regional war, and there are many other countries that have said the same thing, and China is even piped in and said, listen, we need to de-escalate and there needs to be peace, because even China understands the effect that this will have on the global economy for the short, the near term, and even the long term. The importance of this is if crude oil goes up because of tensions and a regional war, next the CPI and inflation go up, then the feds are going to say, well, there's a lot of inflation still going on and it's getting worse. We're not only not going to cut the interest rates, they're going to stay the same. We might increase them. If they increase the interest rates stateside, the stock market is going to correct pretty drastically. However, if Israel and Iran do end up in a regional war and the feds don't increase the interest rates and they just stay the same, then the market will probably do okay. There'll be some corrections, but then it'll rely completely and solely on earnings reports. So if most of the earnings reports on big tech and AI in the next couple of months do well and the interest rates remained unchanged, then even with a regional war, in that scenario, the stock market would be pretty neutral and not a lot would happen. It would just consolidate for the most part. However, with a regional war and the interest rates go going up, then that would be really bad for the stock market. Even with really good earnings, the stock market would most likely correct on a pretty high level and pretty quickly due to inflation, CPI, interest rates, and a regional war. It would spark fear amongst the markets. So that brings me to a really big point here, and that is, how would it affect NIO? Typically, in times of war, stocks that would do the best would be pharmaceuticals, ammo, defense, AI. Things like Palantir would do good. Pretty much anything related to arms, ammunition, supplies, AI, defense, medical, they would do pretty good. Real estate, gold, things like that will be solid. The rest of the market would correct and it would come down. However, with crude oil going up and the prices of the barrel going up and CPI and inflation, what this would do is cause the demand for electric vehicles to go up. Because if crude oil goes up to say $120 a barrel, that means the CPI will be huge and inflation will be massive and the interest rates will go up. And at that point, if that was to happen, regular gasoline would probably near $7 or $8 a gallon. Now, if that was to happen, the demand for EVs would increase drastically, and therefore the stock prices correcting would also send NIO, Lucid, and Tesla up. I know that may sound a little bit weird, but if tensions rise and a regional war starts to be on the brink of an outbreak, and then it actually does come to fruition, and crude oil goes up to $100, $120 a barrel, and CPI goes up, and the feds increase interest rates stateside here in the United States, and as the United States stock market could potentially correct or even crash to some degree, the EV market, I would find, would mostly be on the uptrend, because anything that there's a demand for will go up. And if crude oil goes up and inflation goes up and the cost of gasoline goes up and the interest rates go up, what do you think is going to happen to the demand for electric vehicles? They will go up also, meaning that if a regional war was to happen, NIO would probably do better than most of the other stocks in the stock market. Lucid, Tesla, NIO, BYD, these companies, Rivian, they would all do pretty well. If the feds increase interest rates due to a regional war that ends up coming to fruition, it's likely that NIO could find itself on the up and up because of that, and ultimately because they're an EV manufacturer. And with that being said, it would be possible that NIO could end up at 8, 9, 10, maybe even higher relatively in short time. I don't think crude oil going up hurts NIO. I think ultimately it helps NIO. I just want to point out that I'm no financial advisor, and none of this is financial advice. They're just my personal opinions, just trying to share them with you guys, an overall market sentiment, and just give you guys a general idea of what's going on. But it's ultimately up to you what you guys want to do with your portfolio and your positions. You know, Warren Buffett said it best: when there are times of fear is the time to buy and be greedy, and in times of greed is the time to be fearful and sell. And I really truly agree with this, because during the bull run that we've had the last couple of months, I've been selling calls like crazy, making tons of money. And now that people are kind of fearful, I'm selling puts, making mad premium and not getting assigned, because this is the time to buy. It really is, in my opinion, the time to buy. I picked up $5,000 worth of SoFi. I got another video coming out. I picked up a ton of Palantir and at a discount, and I'm getting into Lyft, and there's other stocks that I'm picking up that are so cheap compared to normal, 10, 20, 30% discount, because when people are fearful is the time to be greedy. Okay, you can see right here, this is crude oil, and right here is the peak that spiked during the issues between Iran and Israel. From right here to right here, you can see we're leveling off. However, if you guys remember, the stock market was really rough August of 2023 until about November of 2023, and that's right here to right here. Every time crude oil is up, inflation is up, and the stock market is down. That's how it works. And you could see that we were peaking like pretty much equal to where we would be in October, which is not that good. The best time in the stock market was December. December was bank. And you guys can see right here, this is where December was. So now we're falling down right here. So if we can get ourselves down to around $79 per barrel crude oil, that's going to get us right back to where we were a few months ago. Things will be nice and smooth. If we go back a little bit further, you can see that everywhere crude oil was up, the stock market was down. Like, look at this. Look at the inflation of $122 here per barrel. That is absolutely nuts. When this happened right here, the stock market was in like a rebound and recovery from 2021. If we go back to 2021, where everything was spiked in the stock market due to COVID, look where this was. Crude oil was literally like $58 to $75 a barrel. What have we learned here? Every time the crude oil is down, CPI and inflation is down, interest rates are down, stock market is up. And we can see that here. Stock market was great. Stock market had major corrections. A lot of companies went down because gas and crude oil was up. Then it leveled off, went back up. We had a rough summer, but not as bad as the previous. Leveled off again, and we've had some great opportunities in the market. We have some tensions in Israel and Iran, and it comes back up. Tensions start to increase. Stock market starts correcting. Crude oil comes down a little bit and settles back into where it was in March. And the stock market, what did it do? It corrected. It's very important that we keep an eye on crude oil. It's just one of the markers in order to identify the market. We do not want to see crude oil get above $90. If crude oil goes above $90, the stock market's going to start having a lot of volatility. It doesn't mean the stock market's going to crash. What it really means is NIO could be at $4 today and tomorrow it'll be at $2.99. Like, it'll be a dollar drop, then a couple of days later it'll be back to $4.50. The volatility will be insane once crude oil starts getting to $90 or $100 a barrel. It becomes pretty much anyone's guess where anything's going to go for the most part. If crude oil was to reach $100 a barrel, things will start coming apart. Like, the IV will be pretty nasty in the market. There'll be a point where I wouldn't even recommend buying any calls or puts. You'd want to just take it day by day, and things can get rough. If crude oil ends up at $115 to $120 a barrel up here, it's going to be like 2022 all over again. There's going to be like a massive correction and stuff like that. I don't think that's going to happen because that kind of a jump would take an all-out regional war. And I don't think that's going to happen. I think people, societies today, I'd like to have faith that we're a lot more intelligent than that, and that war doesn't solve anything. Looking at this, if crude oil was to come back down to, say, I don't know, here, $77 a barrel, which it's on track to doing, the stock market's going to do the exact opposite. There's also something else to look at, and that is the VIX, which is the volatility of the S&P index. Okay? If we notice when crude oil goes up, the VIX goes up. When they go up, when each of those go up, the market goes down and or becomes volatile. We really don't like the VIX being at 18. 18's rough. 18's really not good. Last September, October, even August, we were up in the 21 range. If the VIX stays below 15 or 16, we're relatively in good shape. And that's where I like to see us. On the VIX, we want to be below 16. So let's look at the VIX, and you guys can see it kind of came up. Now it's correcting. We really want to see some correction here. It's happening. Things have gotten a little better yesterday and the day before. We need to see more of a correction here. And when the VIX starts to come down and starts dropping into the 17s, getting closer to 17, and this line, along with crude oil coming down, like it looks like it's going to happen tomorrow, the next day, and the next week, I would say we could correct in the next week or two, as long as nothing crazy happens in Israel and Iran. I'm not really concerned. There's a lot of investors that aren't concerned. Crude oil has come back down. Things have corrected. Israel hasn't retaliated. Hopefully, we can have some peace. Even China is speaking on the issue of peace and de-escalating quickly because they understand how much impact a regional war could have. And unfortunately as it may be, if one was to happen, it's unlikely that NIO would be impacted negatively as much as other stocks, and most likely would see a price hike due to EV demand. I told myself that when I achieved financial freedom, that I would share my knowledge and want to help others to be able to attain the same thing that I did and to make it even easier for them, which is why I make these videos and I'm so passionate about it. And I never really have to worry about money. And that is something that can really drag someone down, is worrying about money, especially in times like this, which is why I make these videos, because I really want to help you guys. I want to spend time making content that's going to help others. I want to spread the knowledge, and I really want to be able to give people an opportunity to make consistent returns, possibly retire early, to not have to worry about finances and be able to travel and do the things that you want to do. I'm divorced with kids, and I can take them places and do fun things and not have to worry about about money. I don't have to sit here day in and day out worrying if I'm going to make enough money to take care of them. It's just not something that I have to do anymore because I achieved financial freedom, and it's something that I really would love to see you guys have for yourselves as well. Thanks so much for stopping in. If you guys enjoyed the video, be sure to subscribe, tap the bell. This way you guys know when I post new videos. And remember, until the next video, let's grow our wealth together. Take care, guys.